Hello viewers and welcome to First PUC Accountancy class. In today's class we will solve a problem and we will try and learn how to pass the journal entries. The transactions related to a business organization have been listed out. Based on these transactions we will pass the journal entries. Journalize the following transactions in the books of Banu Traders for the month of December 2017. December 1st, started business with cash rupees 1 lakh and machinery rupees 1 lakh. So the accounts involved are cash account, machinery account and capital account. Cash is an asset, machinery is also an asset, capital is capital. When you invest cash, cash balance will increase in an asset has to be debited. You invest in the form of machinery, machinery is an asset, asset value increases, it has to be debited. Capital is capital, capital value also increases, increase in the capital has to be credited. So the journal entry will be cash account debit, machinery account debit to capital account. 2017 December 1st, entry is cash account debited, machinery account debited, machinery account debited to capital account. To capital account, amount of cash invested is 1 lakh rupees. Amount of machinery is also 1 lakh rupees. Total amount of capital is 2 lakh rupees. Write the narration. Started business with cash and machinery. Started business with cash and machinery. On December 2nd, deposited into bank rupees 60,000. Cash has been deposited into bank. So the accounts involved are bank account and cash account. Bank is an asset, cash is also an asset. Whenever you deposit cash into bank, bank balance will increase. Increase in an asset has to be debited. Cash is going out of the business, cash balance reduces. Decrease in an asset has to be credited. So December 2nd, 2017, entry is bank account debited to cash account. Amount deposited is 60,000. Narration, deposited into bank. Deposited into bank. On December 4th, bought goods on credit from Imani rupees 40,000. Nothing but purchased goods on credit from Imani rupees 40,000. So the two accounts involved are purchases account and Imani account. Purchase is an expense. Imani is the supplier who has supplied on credit basis. We have the obligation to make payment. A creditor, nothing but a liability. When you make purchases, the expense value increases. Increase in an expense has to be debited. Imani is a liability. Liability value also increases. Increase in an liability has to be credited. So the entry will be purchase account debited to Imani's account. December 4th, purchases account debited to Imani's account. Amount of purchase is 40,000. 40,000. Write the narration. Purchased goods on credit. Purchased goods on credit. Next transaction, purchased goods for cash rupees 20,000 on December 6th. So purchases have been done on cash basis. So the accounts involved are purchases account and cash account. Purchase is an expense, cash is an asset. When you make the purchases, expense value increases, it has to be debited. Cash is an asset, cash you are paying, cash is going out of the business, asset value reduces, it has to be credited. So the journal entry will be purchase account debited to cash account on December 6th. December 6th, purchases account debited to cash account. Amount of purchase is 20,000. 20,000. Next, write the narration. Cash purchases. Cash purchases or purchased goods for cash. So the page has ended. Next step, you have to calculate the total. So the total carried forward is rupees 3,20,000. 3,20,000. So the total brought forward from the last page is 3,20,000. Total brought forward. Next transaction, on December 8th, returned goods to Imani rupees 4,000. We have purchased goods from Imani on credit basis worth rupees 40,000, out of which 4,000 goods have been returned back, maybe damaged goods or due to other reasons. We have returned the goods to Imani traders. So the two accounts involved are Imani account and purchase return account. Imani is an liability, purchase return is an expense. We are returning the goods, to that extent our liability decreases, it has to be debited. Purchase return is nothing but it is a part of expense, to that extent our expense value reduces. So the expense value is reducing to the extent of 4,000, it has to be credited. So the journal entry will be Imani's account debited to purchase return account on December 8th, 2017, December 8, Imani account debited to purchase return account. Amount of purchase return is 4,000 rupees. Narration will be goods returned to Imani. Next transaction on November 10th, sold goods for cash rupees 20,000. So the two accounts involved are cash account and sales account. Cash is an asset, sales is an income. When you sell the goods, you receive cash, cash balance increases, it has to be debited. Sales is an income, income also increases, rule says it has to be credited. So the journal entry will be cash account debited to sales account on December 10th. Cash account debited to sales account. Amount of cash sales is 20,000. Cash sales is the narration, or you can write it as goods sold on cash basis. Next transaction on December 14th, check given to Imani rupees 36,000. We have purchased goods worth rupees 40,000, out of which 4,000 have been returned. That means the balance remaining is 36,000. Now we have paid this 36,000 by issuing a check. So the two accounts involved are Imani account and bank account. Imani is the liability, creditor, bank is an asset. Our liability or creditor's value decreases, you have paid in full, so it has to be debited. Bank balance reduces, decrease in an asset has to be credited. So the journal entry will be Imani account debited to bank account. December 14th, Imani account debited to bank account. Amount paid is 36,000. Narration: paid to Imani by check. Paid to Imani by check. Next transaction on 17th of December, goods sold to Goel traders rupees 3,50,000. Now the name of the person is mentioned, that means it is a credit transaction. Goods have been sold to Goel traders on credit basis and the value of sales is 3,50,000. So the two accounts involved are sales account and Goel traders account. Sales is an income or revenue, Goel traders is the debtor. We have the right to receive from Goel traders, so it is a debtors or it is an asset. So debtors in the form of an asset. Sales value increases, increase in an income has to be credited. Asset value in the form of debtors also increases, increase in the asset has to be debited. So the journal entry will be Goel traders account debited to sales account. December 17th, Goel traders account debited to sales account. Amount of sales is 3,50,000. 3,50,000. Write the narration. Goods sold to Goel. Goods sold to Goel, that means it is on credit basis. Next we have to calculate the total and carry forward the total. So the total carried forward to the next page is 7,30,000. 7,30,000. So the total brought forward is 7,30,000. Next transaction on December 19th, drew cash from bank for personal use, rupees 2,000. From the bank, 2,000 rupees has been withdrawn for the personal use of the proprietor or the owner. That means it is nothing but the amount of drawings. So the two accounts involved are drawings account, and it has been withdrawn from the bank account. Drawings is a part of capital, bank is an asset. Capital value reduces. You are taking back the amount of capital that you are invested. To that extent, capital value reduces, so it has to be debited. Bank balance reduces, decrease in an asset has to be credited. The journal entry will be drawings account debited to bank account. 2017 December 19th. Entry will be drawings account debited to bank account. Amount of drawings is 2,000. 2,000. Narration: withdrawn for personal use. Withdrawn for personal use. Next transaction on 21st, Goel Traders returned goods rupees 3,500. We have sold goods worth rupees 3,50,000 to Goel Traders. Now out of that, 3,500 goods have been returned back. That means it is nothing but the amount of sales return. So the two accounts involved are Goel Traders account and sales return account. Goel Traders is the debtor and asset. Sales return is a part of income. Now the asset value reduces, it has to be credited. Sales return is an income value also reduces. Rule says that when the income value reduces, it has to be debited. So the entry will be sales return account debited to Goel Traders account. 21st of December, sales return account debited to Goel Traders account. Amount of goods returned is 3,500. Narration: goods returned by Goel. Goods returned by Goel. Next transaction on 22nd of December, cash deposited into bank rupees 20,000. You have deposited cash into bank account. So the accounts involved are cash account and bank account. Cash is an asset, bank is also an asset. When you deposit cash into bank, bank balance will increase. So the asset value increases, it has to be debited. Cash is going out of the business, cash balance reduces. When the asset value reduces, it has to be credited. So the journal entry is bank account debited to cash account. December 22nd, entry is bank account debited to cash account. Amount deposited is 20,000. 20,000. Narration: deposited cash into bank. Deposited cash into bank. Calculate the total. Total carried forward. Is rupees 7,55,500. 7,55,500 rupees on both debit as well as credit column. Next transaction on December 26th, check received from Goel Traders rupees 3,41,500. We have received the amount of sales from Goel Traders. The remaining balance, that is 3,41,500. So, the two accounts involved are Goel Traders account and bank account. We have received in the form of check. So, bank is an asset, Goel Traders is also an asset in the form of debtors. Bank balance will increase in an asset has to be debited, and Goel Traders account will reduce, or the debtors value will reduce, it has to be credited. So, the journal entry will be bank account debited to Goel Traders account. The date is on 26th. So, 2017 December 26th, bank account debited to Goel Traders account. Goel Traders account 3,41,500. 3,41,500. Narration: check received. Check received from Goel. Check received from Goel. Next transaction on 28th, goods given as charity rupees 2,000. Social service done by the business, and they are given goods worth rupees 2,000. So, the two accounts involved are charity account and purchases account. Charity account and purchases account. Charity is an expense, purchase is also an expense. When you are giving away goods in the form of charity, the expense value increases, increase in an expense has to be debited. You are giving goods out of your purchases, to that extent purchase value reduces. So, one more expense reduces, it has to be credited. So, the journal entry is charity account debited to purchases account. December 28th, charity account debited to purchases account. Amount is 2,000 rupees. narration, goods given as charity, goods given as charity. Next, on 29th, rent paid rupees 3,000. Payment of rent accounts involved are rent account and cash account. Rent is an expense, cash is an asset. When you make the payment of rent, expense value increases, it has to be debited. Cash is going out of the business, balance reduces, it has to be credited. So December 29th, rent account debited to cash account. Amount of rent is 3,000 rupees. 3,000 rupees. Narration, paid rent in cash. Paid rent in cash. Next, total carried forward to the next page. So the total is 11 lakh 2,000, 11 lakh 2,000. Next transaction on 30th of December, salary paid rupees 7,000. So the two accounts involved are salary account and it is paid in the form of cash. Salary is an expense, cash is an asset. Your expense value increases, it has to be debited. Asset balance reduces, cash is going out of the business, it has to be credited. So the journal entry will be 2017 December 30th, salary account debited to cash account. Amount of salary paid is 7,000 rupees. 7,000. Write the narration. Paid salary. Paid salary. Next, on 31st December, office machine purchased for cash rupees 3,000. A machinery has been purchased by paying cash worth rupees 3,000. So the accounts involved are machine account and cash account. Machine is an asset, cash is also an asset. Machine value increases, it has to be debited. Cash is going out of the business, asset balance reduces, it has to be credited. So December 31st, 2017, machine account debited to cash account. Amount is 3,000 rupees. Write the narration. Machine purchased for cash. Now all the transactions related to the business have been recorded. Next step is to calculate the total. So the total should be always equal in both the columns, that is debit column as well as credit column. 11 lakh 2,000 plus 7,000, 11 lakh 9,000 plus 3,000, 11 lakh 12,000. So the total is 11 lakh 12,000. 11 lakh 12,000. Thank you so much.